Hello, and thank you for joining us today on the Gentle Art of Crushing It show, where we focus on learning and sharing with our listeners all there is to know about how to create success in our lives. This show stands on the shoulders of giants. Our mission is to empower and inspire our listeners to create the life of their dreams whilst having a blast in the process. Let's celebrate life together. Welcome to the show.
All right, welcome back to the Gentle Art of Crushing It podcast. My name's Randy Smith, and I will be your host today. And really excited to have a friend, Pascal Wagner, with us today. Pascal is the founder of Grow Your Cash Flow. He is newly announced co-host of the Best Ever CRE podcast. And this is something that should get everybody's attention that is on this, listening to the show. He has a portfolio that generates over 250 grand a year. So Pascal is a guy that we want to get to know more. So thank you so much for joining us, Pascal.
Yeah, happy to be here. Thank you for having me, Randy.
Awesome. Well, let's jump in as we always do. Can you give me your perspective on the current state of the market and how that is affecting the passive investing and passive investing community?
Yeah, I think very difficult for me to kind of like give a broad overview. I think, an analyst at one of the CBRE firms would be able to give you a much better insight over the landscape. But I think from my lens or my point of view, I have kind of really two different things I'm looking at. First is I have an active portfolio of single family homes that I rent by the room in Atlanta. And I then also have kind of my passive portfolio of deals with investment operators. And I can tell you that at least through the process that I go through, my team goes through, we subscribe to every single email list. We click on every ad. We're in a bunch of fund manager mastermind groups. And so we get like 5, 10, 20 deals a week that I share with my email subscribers. And it's through that I have maybe a perspective or a lens on the market. And I think generally, at least what I'm seeing now is there's a lot of factors at play that make real estate probably the same, if not worse, than the 2008 global financial crisis. And it's interesting because I don't think many of us think of this time period as maybe as bad as that time period, but I think it's because it affects a different set of investors. I was listening to a podcast yesterday where with Grant Cardone and Ryan Pineda, and they were talking about how there are less real estate transactions happening today than the 2008 crisis. And if you think about, brokers, real estate agents, insurance, lenders, if there are less transactions happening, there is less money being made in the industry overall. So I think that was an interesting data point. It's maybe not affecting people who buy in the residential market like I do for my active portfolio. But if you look at the commercial market where, a lot of operators have to refinance their debt and a lot of LPs are losing money, there's a standstill happening there from that perspective. I think what is interesting is that when I look at all the deals coming through my deal flow, I'm seeing a lot more preferred equity deals coming through, meaning deals where you can invest as an investor in a deal that's gone sideways and they're trying to save the deal with an equity investor. I think there are a lot of, so there's deals like that are coming through, whereas instead of it being a 5 to 10 year time horizon style deal, it's more, these are like shorter time frames, like, hey, we need to raise a little bit of money in order to extend our runway, refinance our debt so that we can save these properties sometime in the next 5 years. So, everyone says there's still deals to be had. And I think depending on what you're looking for, if you're a short-term versus long-term investor, there might be more opportunities in the short term, but there's less deals happening now than I've seen ever before.
Awesome. And I would agree with you 100%. It is an interesting time to be in the space. And I want to circle back and spend some time, if we can, talking about kind of the deal flow that you're seeing in the pref equity. But before we jump into all of those type of details, let's take a step back if we can. Can you tell the audience kind of your origin story and how you found yourself to where you are today?
Yeah. I would probably say right after I graduated college, I bought my first rental property with my best friend, Diego Corzo. and we bought them in Austin, Texas, and we would buy single family homes and rent them by the room. So house hacking. It was like, we would buy one with, low or no percent down, and then we'd rent them out by the rooms, and you'd be able to live for free.
And so were you living in these assets yourself as well? So it was true house hacking, or?
I wasn't, but the first deal started out as a house hack that Diego lived in, and I was the money partner. So Diego basically came to me and was like, hey, I'm doing this deal. Can I borrow some money? I lent him money to buy his first house. We saw how profitable that model worked, and Diego was living for free and making $700 a month. And then it was like, all right, let's do a couple more. We'll do them together. And that's kind of how we got started. From there, I built up a small portfolio in Austin. I had 4 homes there, and then I found another partner in Charlotte, North Carolina, and I bought 2 homes there. And I was always kind of the money partner in the deal. I always had to find someone that was boots on the ground that would manage the deals. Eventually sold those for a big profit. Like there were, $30,000, $40,000 profit on each home as we had the run up over the last decade. And I transitioned to running a tech startup, and I'll kind of like gloss over a lot of these details because it's less real estate related, but we built like the Uber for real estate photography, got to close to $1 million in annual revenue. We had, 55 team members, launched in 6 different cities. We realized that business wouldn't be a $100 million or $1 billion business. And so we sold that to a national photography firm, and I moved on to working at, Techstars, which is a venture capital firm for early stage tech companies. While I was there, my dad passed away, and I became the new financial manager of the family. And, my mom's 65 years old, knows nothing about money, and all of a sudden had an inheritance of a couple $1 million left. And I needed to figure out how to provide her a retirement and help her live off the income. So, from there, I basically having worked in venture capital, understanding how funds work, being in GoBundance and learning from mentors and people who had already retired or, have this concept of being 100% or of living 100% off of their passive investments. I learned from a lot of them on what are they investing in, what kind of asset classes. And that's when I kind of realized, no one sits down and teaches you about the landscape of passive investing. And after building, my mom, we built half our portfolio in co-living and the other half in these passive investments that spans all different kind of asset classes, self-storage, oil and gas, ATMs, multifamily development, retail, private credit, transactional funding. I've done some VC and some private, I've done the gamut now.
Sure.
Now in total, we have a portfolio that generates over $250K a year. And I've just realized I wish someone sat me down and could walk me through the roadmap
Sure.
of how to do it. And so that's how I've ended up to where I am today.
Are you interested in real estate investing but don't know where to get started or think you don't have the time or money? Are you stuck in your W-2 because the golden handcuffs make it hard to walk away? If this sounds like you, check out impactequity.net and schedule some time to talk with the founder, Randy Smith. Randy went from massive income to leaving his W-2 through passive income, and he can help you do the same. www.impactequity.net.
Awesome. And so that's how Cashflow Academy was born, just out of your own experience of having to manage this capital and the blood, sweat, and tears that it takes to figure out how to play in this alt space, it sounds like.
That's exactly.
Interesting. Okay. So and this has been a process of 10 plus years that you've been doing this, or how long what's the time horizon on this?
Yeah. So I started investing in my first home in 2014. And so I've been at it for over a decade now in kind of the space. And in 2020, I started doing passive investments with other operators in 2018. And then I really started hitting it with a lot of these past investments in 2021, 2022.
Got it. So now today, you've got a portfolio that's generating $250 grand a year between active and passive. Is it a pretty equal mix? Is it 50-50, or is a large majority of that active or passive?
Yeah, I think it fluctuates over time. I think I conservatively say 250K. If I look back a year ago, I was making K from my passive portfolio, and one of those deals went sideways, the ATM deal, which happy to talk about if we want. But and so now that portfolio is only generating 100 a year, right? A year ago, I actually went through a part where my old property manager that I hired for my active real estate portfolio wasn't doing very well. Occupancy dropped down to 65%, and it was like breaking even. And I fired them, put my whole team in place, like basically built out an in-house team. And now that's generating like 20% plus. Like if I look at last quarter, it generates over a 23% cash on cash return. And so, like, I actually think that portfolio is going to generate, if we look at a run rate, we look at, we take the last 2 quarters and then we project 2 quarters forward. I think that's going to make 240K a year. But it depends on, we had a lot of capital expenditures and I had to invest 30K. And so conservatively, I say 250. I actually think this year we'll make closer to 320, 330. But I'd say it's split 40-60, 50-50, somewhere in there.
Okay. All right. So obviously we focus more on passive investing, so we'll probably steer the conversation more towards that. If you think over the last 6-7 years since you've been playing in the passive investing space, what are some of the very high level lessons that you've learned placing a significant amount of capital into a bunch of different operators, a bunch of different deals? Are there some big learning or aha moments that you've had that you'd care to share with the audience?
Yeah. So I'm looking at what I call like my LP investment schedule. It's like a sheet, just like if you're in active real estate, you have a real estate investment schedule that you have to show the bank that shows all your properties, how many mortgages you have. I have the same thing with my LP investments. And I've placed 3.4 million since 2018. Lessons I learned. Look, I think when you get started, you don't know what you don't know, which is why I'm really passionate about what I'm teaching now. Is like, if someone had explained the landscape to me, I think I would have approached it much differently. So my first investment was giving a loan to a flipper. So I partner, he needed $150,000 to buy a home, flip it. He's been doing this for several years. And so I sat down with 3 other friends. We each put in 50K, created an LLC, and invested it with him. And I think it's how anyone typically gets into this kind of space. It's like, someone and there's a unique opportunity and you think it's a good deal. And so you go do it. And, thankfully it all turned out okay. They made their monthly interest payments on time. And then within 9 months, they flipped the home and we got our money back. So, first deal, not a home run, but we made I think it was 12%. Great return.
Yeah, fantastic.
I think about that, and then I think about the funds that I'm in today, and I look back and I think about how much risk I took. And I think this concept of risk-adjusted returns, I don't think I fully understand what risk-adjusted returns means today, but I definitely know it's significantly better than when I first started.
Sure.
Giving one person a loan on one house, it is significantly riskier than me placing, $50,000 with an institutional fund like DLP Capital that has, is amortized across, 50 to 100 plus loans, where pension funds and institutions are investing in people who can't lose money, and they have audited financials, and you can, it's just a totally different risk profile. And back then I didn't know that those types of opportunities existed. So I think, there are a lot of things I've learned along the way of like, I prefer being in audited funds versus not. Like, I prefer to be in funds versus syndications most of the time. I prefer things that cash flow in the first year versus, developments. I've learned, what are all the things that I ask for when I'm doing due diligence in a deal versus when I started. Like when I started, I didn't ask for almost anything.
Yeah, yeah.
And I think just over time you become, first off, you don't know what you're allowed to ask for or
Right.
even what to ask for. And so I think, unless you have a mentor or someone that sits down and tells you those are things you learn by hard knocks. And that's how I started. And I'll pause there. I've learned a lot.
Yeah, no, I think it's a great answer. And I had a similar journey as well, where I wrote far too big of checks with far too little due diligence early on. And my risk exposure was through the roof compared to where I'm at today. And, you talked about this idea of the questions that you're asking today. And I heard a podcast, actually, it was, I think it was a webinar that I was listening to. And he said, one of the questions came in like, how do you tactfully ask these operators these questions? And the guy's answer, because he's like a super LP investor, his answer was, it doesn't matter. Like, ask the questions. It doesn't really matter whether you ask them tactfully or not. And if they're offended by the questions you're asking, odds are they're not the type of operator you want to be working with in the first place.
Exactly.
Right?
Yeah.
So, and I remember being I remember being scared to ask the questions. And I know today that I have to ask the questions. And if I'm not doing that, certainly I'm not doing the due diligence I need to do for my own dollars or for my investors. So,
and what's funny is there's a shift there because, at the beginning, you're afraid of asking the questions because you're afraid of like, oh, what if they think I'm unsophisticated or like, I don't, and I think the reality is that if you're not asking questions, they by default think you're unsophisticated. It's actually the opposite.
Yep. Yeah. Very good point. Very good point. Well, I'd love if we can we like dig in if you have, well, maybe we do this. What's the buy box today? Or do you have a very specific buy box of what you're looking to invest in?
Yeah. I love this question of the buy box. It's something I focus on a lot with people who come through my world. My buy box change. So how I tell people or what I like to think of my portfolio as is I have a buy box for a specific category of money. I think, I have a buy box for things that I buy in my active portfolio. And then I have a high equity growth buy box and I have a cash flow buy box. And, that's how I think of my entire investment portfolio. I've got like several $1 million. And I would say I have invested 70% of my money in the cash flow portion to get to that 250, 300 in cash flow. And all of that, how I think about that is I need to generate at least 10% cash on cash returns for me to make a cash flow investment. And if I'm investing, then how I think about it in my framework is like, okay, now I have my 3K a year in cash flow needs met. Any money I make or any other deployments over that now go into my high growth equity bucket. And, my high growth equity bucket are things that I believe will have a chance to 5 or 10x over the next 10 years. So, it's interesting because I look at a lot of these real estate deals, and there are a lot of deals that are like low cash flow, but high 15, 20% IRR type deals. And maybe it's because I've been really successful with my equity investments. I've had 2 investments 10x over my 20-year career. I've had my Tesla position that I bought over a decade ago go from $100K to 1.5 million. And then I've invested in MicroStrategy back when MicroStrategy first debuted as the Bitcoin ETF, and that went from 20K to 500K. So to me, when I'm investing, if I'm investing for equity growth, I'm looking for that. So, just something as someone who's in this industry, I think about a lot. Like a lot of people are like, oh, I want to invest in real estate and I want like, maybe more of an equity growth focus. And it's like, there's a cap how much you can make in
Okay.
real estate. I don't know. I think that that's how I think about if I'm looking for cash flow, let's make sure that investment cash flows. And if I'm looking for equity growth, let's make sure that if it's a slam dunk, that it has slam dunk potential, not like a 15% IRR or 2x equity multiple, 2.5x equity multiple.
Awesome. And it's interesting that you have that detailed of a plan, because you talk with most passive investors and they won't get beyond the first sentence in responding to that. So that's fantastic to hear. Do you have like a diversification strategy as far as number of operators, percentage of exposure, like how much per deal, those types of things that you follow?
Yeah. Okay. So I want to take you back to the mindset that I was in when I started doing passive investing. So after my dad passed away, I needed to figure out how do I generate cash flow for my mom. And the thing I knew how to generate cash flow was this co-living house hacking model. And so I put all of a lot of that cash into that portfolio. And $3 million, portfolio, and it was generating $40,000 to $50,000 a month. And then I had this kind of like aha or oh shit moment where I realized 100% of the money that I'm now living off and my mom's living off comes from this one asset class in this one city. A hurricane comes through or regulations change or I've hired a property manager and the occupancy is slowly starting to drop. And now like the single source that I depended on for income is at risk, just like any W-2 employee. And it was at that point where I realized like, okay, I need to, like, no one would recommend a retiree to have all their eggs in one basket,
Sure.
And so that's when I kind of really was like, okay, I need to, like, let me go to all these mentors, people in GoAbundance that have solved this problem. How have they solved the problem? Who are they investing with? And it was at that point when I kind of thought like, okay, instead of having 100% of my income, even though I make higher returns in this one asset class, it matters more to me that the income is diversified, even if I don't make as much. And so I pulled, it was a portfolio that was all in cash. I put a portfolio loan on it and I pulled the money out. And all of a sudden, I had like $2 million that I needed to redeploy. And this is where I wish I had some education or like I knew a lot more about the space, because I think about the amount of time the money sits there without making an investment. And this was like before 5% money markets were a thing. You'd like earn 0.5% of the money and there was high inflation. And so you feel this immense pressure to make the investment. I wish I would have found something like a private credit fund that that I could have had the money sit there, earn 8 to 10%, and then slowly invest in deals and have more time and not feel pressured to make that. That's kind of like a lesson learned, something I wish I knew. But then I was like, okay, my goal is to preserve this capital and then spread the risk, diversify. So then I was like, how do I put 50K here, 50K there? And then it was like, let me get 1% of my income from 100 different investments. And I think I think the pendulum, you got to figure out where you sit on the spectrum, right?
Sure.
On the spectrum, I first started with 100% from one place, and then I kind of went down this path of like, I want 1% of my income from a bunch of different places.
Sure.
And now I think I'm kind of coming back to the middle.
Okay.
Where, I think there's a point where I don't want to have more than 3 or 5% of my net worth in any one deal.
Okay.
I don't want to lose my money because like a huge portion of my wealth because a deal or an operator or something goes sideways. But I do think that there is something to be said about like, know what you own and why you own it. Like when I think about my stock portfolio, I have 6 positions that I own. And I know why I own them, and I feel very confident in them. And I've invested in 23 LP investment opportunities, and I've learned quite a bit. I'm glad I went through, a lot of it. But I would not make a lot of the same investments today. And I think that's part of why it's helpful to make a lot of small bets in the beginning to learn. But I think I would prefer to have 5 to 10 that I'm all in on,
Yep.
and
Yep.
always have room, keeping an open eye for a new operator or an opportunity. But I'd rather have 200K with 10 people than I think 50K across 40 people.
Yeah, no, I think it's a good point. I went through kind of a similar process as you did as well. I'm an LP in 25 different positions, and I'm probably too heavily weighted in 1 or 2 operators. And I wish I would have spread that around a little bit more, which is easy to say in hindsight. At the time you get excited. You've got an operator who's a hot new operator. You want to literally, you're like, just take all my money. Like if I can give you everything, I would.
Yeah.
But you learn pretty quickly if you're around this space long enough that even the best operators have bad deals. Having too much exposure to any one, whether it's asset class or business plan or vintage, is a big one, right? And I made a similar mistake as I deployed too quickly. And one of the lessons I share with my investors is, if you've only got a couple $100,000 you're trying to deploy, let's do that over the next couple of years. Right? If you've got $1 million, let's spread it out even a little bit further than just that. And fortunately, you and I both work with operators where you can just park cash and get 8 to 10+% return. That's almost as safe as having it sitting in some type of a bank account, right? That's
Right.
FDIC insured. I think it's amazing that you've built what you've built with the Cash Flow Academy, because that's exactly what I wish I had when I first got started. That's what I'm trying to duplicate, not in quite a professional way that you are, your Cash Flow Academy, but it's what investors need when they get started. Can we dig into that a little bit and tell the audience, what is it that you offer? What is the value they receive? What can they expect if they were to, go to your website?
Yeah.
Start looking into this.
Yeah, I mean, didn't intend for this to be a pitch about Cash Flow Academy, but happy to talk through it. I think,
Sure.
I think I go back to the question that I had, and I think that at least the people that come through my door ask, which is pick a number. I pick a number of 100K. If you want 100K in passive income, how do you get there? Is that 10 investments at 100K each that generate 10% cash on cash? Is it 20 investments at 50K? Are they all in funds? Or are they in syndications? Do you need monthly or quarterly distributions? Do you care if they have first year cash flow? Or are you okay investing in developments and value adds where you don't get any cash flow for the first couple of years, but you're targeting your retirement or to leave your job in 3 years, and so you're okay with that timeline? There are a lot of these things. If someone just sat down and figured that out, or asked me those questions, it totally changes the way you approach. Most investors get a deal and then they evaluate the deal. Oh, is this a good deal for me? That's the biggest question. How do I vet a deal is the best deal for me? And my thesis is that you can't decide if this is a good deal or a good operator if you don't have a roadmap. Someone joins my program, I take them through a 7-step process called the Achieve Method. And, it's basically, let's pick a goal. Let's call it 100K. Let's build out the map. Let's make an example. Do you think that's 20K, 20 investments at 50K, generating 8% cash on cash? Okay, this is how much income you're going to make if you followed this plan. Is that even something that you're excited about or
Sure.
not? I've already had students go through the program and they're like, oh, wow, I need way more money than I thought. Or, oh, I already have all this money. I could just deploy this and be done next year. And only when you see that, and it's simple, it's in a Google sheet, but it paints the picture. So I think that's first is like, what is the roadmap? And then helping you think through your thesis. Do you understand that there's like 20 plus different asset classes that you can invest into? And understanding, okay, why, like what problem am I trying to solve? Am I trying to grow my equity or am I trying to get cash flow? You know, is, you know, if what are the differences in mobile home parks versus multifamily versus oil and gas versus self-storage? Like all of these have different pros and cons. Like, you know, mobile home parks typically have a lot higher depreciation because the IRS schedule allows them to depreciate their assets over a shorter period of time than residential or multifamily real estate. So if you're someone who makes a lot of money, like that, it would be like, maybe you should look at this asset class for that reason. But if you're not in that bucket, then there are other asset classes that might be better. So just giving you an outline of all the different things you could invest into, what are the pros and cons, and why does that, like which one might be better for you based on where you're at in life and what your interests are in, or how you think the economy is going to.
And is this one-on-one coaching, or is it like pre-recorded sessions or group coaching? What's the format?
Yep. So right now it is a course, video course, plus 5 one-on-one sessions. And so there's like an onboarding call, an offboarding call, and then there's a call where we review your investment thesis together, a call where we review decks and deals together. You know, because my thesis is you only get, like you say, oh, I'm interested in multifamily and have monthly cash flow deals. Let's look at 20 different of those deals and the decks. And then you tell me which deal you think is better or worse out of the 20 we looked at. Right? Like that's how you start understanding. And then the third piece is doing a kind of like a deal vetting, deal analysis. So just like what you do, there's a checklist, and let's make sure we ask the same 50 to 100 questions on every single deal that we do. And the idea is that it's fluid, but only through, you know, when you make an investment or after you have a deal go sideways or after you've been in a couple deals, you realize, oh, I wish I asked this question or I wish I knew that. And it's, okay, great. Let's take those and let's put them into your deal vetting questionnaire. And that's how you iterate and over time become a better investor. So I'm giving someone the framework of how to go from A, like, I want to make 100K, don't really know how to do it, to Z, investing in their first deal with confidence.
Love it. Yeah. And God, I wish this was available, Pascal. About 7 years ago, I would have made a lot of different decisions, I suspect, throughout my role. So amazing that you put this together. And this is something you launched in the last year or two, I believe. Since I've known you, this has been launched. So I would imagine it's evolving and growing and getting better with every iteration as well.
Yeah. I mean, look, I think, you know, it's been fascinating because when I first sold it, I had a couple people on a call and I had a Google sheet or a Google Doc, and I was like, hey, here's a program. Like, would you be interested in it? And then they bought it, and then I recorded all the content, right?
Sure.
And so now I've had, you know, 10, 15 people go through the program, and I've learned what are the recurring questions? What are the, oh, I want to learn how to set up my portfolio as a business. How do I invest out of an entity? How do I, you know, I'm starting to add all these different pieces that I'm kind of learning through. So it'll continue to get better over time, but it's very much like a one-on-one. Having you know, I'm not a financial advisor. I'm not someone here who's going to tell me, here's what you need to do for your situation. But it's more of here's a second opinion from someone who's achieved the goal that you're trying to achieve. You know, bounce your ideas off of me.
Well, gosh, Pascal, this has been a really neat conversation. You bring a different perspective to this than anybody I've had on the show. So I really appreciate you coming on and sharing all of your knowledge and your experience with us. It's been a joy to have you on the show. Thanks so much.
Yeah, no, thank you for having me, Randy.
Well, if you do have a couple of minutes, though, we have kind of our final 5 that I like to ask everybody. It gives us an opportunity to get to know you a little bit more personally, but then some like very direct questions too about what you would do right now. So for the newer passive investor, is there an educational resource that you would like to share or one you would point people to get started or continue their education journey?
Look, I think when you're first getting started, the first thing you're doing is just educating yourself. You're listening to podcasts, you're reading books, and there are a bunch I would list, right? I think, Long Angle Community, Passive Pockets, Best Ever Real Estate Podcast, Justin Donaldson's Lifestyle Investor. There's the Hands Off Investor, I think, by Brian Burke. Yeah, there are, a lot of these are amazing resources. I also, I'm going to do a shameless plug of like, one of the first problems I had was, how do you get deal flow? And so I have at the passiveinvestingstarterkit.com is like where someone can go sign up and they get weekly deal flow from me from the stuff I'm finding and just start looking at a bunch of deals. But the first step is just sinking into all the different resources and hearing different things and learning, oh, I don't know this term. There's also the 506investorsgroup.com that is a good resource. So plugging into all of those.
Love it. Love it. And actually, I can vouch for the email as well. I am on your deal flow email, and I have more deal flow than most people I talk to. They struggle. They say that I don't see enough deals. But just by signing up for your email, they're probably going to see more than 80% of the passive investors out there. So yeah, that's a great resource.
Yeah, there's also, I'm thinking Invest Clearly is an interesting website where investors get to review the operators they've been with. And there will be more.
Okay, good. And actually, we just had, I can't remember the founder of Invest Clearly, but we had him on in the last couple of months as well. So great, another great resource. So, well, what kind of books and podcasts are you listening to? It doesn't even have to be real estate related. I'm always trying to find the next great podcast or book to read.
Yeah, I think this shifts depending on where I'm at, but the three I've been listening to lately, I love listening to Ryan Pineda. I like listening to Grant Cardone, and non real estate All In podcast has been a huge fan favorite. Also, just being in tech, like I resonate with a lot of what they do, and it's also just been interesting to get follow maybe a tech perspective on the political climate has been interesting.
Absolutely. Yeah, it's certainly over the last 90 days or so has been interesting. And we've got the All In Microtrap. Do you participate in that with GoBundance?
No.
There is an All-In Microtribe. Yeah, absolutely.
Yeah.
Okay. All right. So what's a really good due diligence question that passive investors maybe are not asking and they should be asking?
I think the biggest so something that I was so hesitant to do, and I think, and the reason I'm going to harp on this one is because I didn't know if I could ask for this. And then even when people told me I could ask for it, it felt weird to ask for it, which is asking for historicals. Like and this can be in many different shapes. So, there's a fund that I spoke to last week who was like, yeah, we have a debt fund and it generates this. And I was like, great, I would love to see a loan tape. Like, I want to just see all the loans in the fund, what their interest rates are, when did you get them, like, where are they at? And they were like, we just don't have something like that. And I was like, what do you mean you don't? And it was like, well, we have it. We just don't have it in a format that we show investors. And I think if you're new and someone tells you that, you're like, oh, maybe this isn't something I can ask for.
Yeah.
Like, to me, it's now, especially having a deal go sideways. I now understand the importance of that. And I think it's a new transparency is the cornerstone to investments I make today. And if that if whatever I ask, if the operator is not, look, they might not be an institutional firm like DLP Capital, like Polaris Capital Group, where they automatically just provide that every month. You don't even need to ask, right? Like, I think that is the golden staple, whatever. But to me, if I'm asking for it, I want the operator to be like, what else do you want? Like, you need anything else? Like, I'm happy to provide that for you. Maybe give me a week or two. I need to, But
sure.
Having gone through this down cycle, it's just the burns are what teach you the lessons, and it's hard coded now into my process.
I can't agree more. Transparency is key. I just spent literally an hour and a half on the phone with some asset managers of an operator that I'm looking at, and they showed me everything. They showed me far more than I even cared to see, quite quite frankly.
And that's what you want, right?
Exactly. That's exactly what I want. So yeah, really great question. And we've been, the historicals piece I've been asking for the last year or so. I want to see your most recent investor updates. And that was a hard question to ask a year ago, but it rolls right off the tongue now. I have no problem asking that question. And it's surprising to me how many operators don't want to provide that. And the second they hesitate, that's my first sign that it's time to move on. So
yeah.
Okay, well, good. A couple of fun ones here to kind of wrap this up. Is there a recent bucket list item that you've checked off your list or one you hope to in the near future?
There's two. One, I'm going on my first 12-day transatlantic cruise from Miami to Barcelona.
No kidding. May. Fantastic.
Yeah, I'm a big cruise guy. My girlfriend and I are very big into cruises, and longest cruise I've done is 7 days. So
okay.
this will be a new one. Excited for that. And the second one is I'm planning a Japan ski trip for February, March of 2026.
Fantastic. What a guy in my GoPod just came back from a ski trip in Japan. And I hear it's surprisingly inexpensive compared to what we see here in the States. So yeah. Very good.
And fun fact, I didn't know this until I started looking into it, but average snowfall in like a Keystone Vale, Rocky Mountains is between like 100 and 150 inches per season.
Interesting.
And the top 5 Japanese ski resorts generate between 500 and 900 inches of
snowfall. Very different experience. Yeah.
So 5x plus the snowfall. So if you like powder, it's the place to go.
Fantastic. Did you go to the most recent Utah event and do any of the heli skiing or heli skiing?
No, I unfortunately had a conflict, but
okay.
I did on the previous events, and I did cat skiing, heli skiing is on my bucket list. I need to plan that.
I love it. All right. Final question before we wrap up here. If you had $100,000 you had to invest today and you couldn't put it in some deal you're affiliated with.
Yeah. So if I found a deal that came through my desk, that was interesting, would I invest it somewhere else? Sure. But I think right now my thesis is I would put it into the ones I'm eyeing right now and I'm thinking about deploying into is some of the DLP capital funds. So like a DLP capital lending fund, or a DLP Capital Housing Fund, because they have the ability to withdraw on an annual basis. And I think, if I think about the housing fund, earning 8 to 10% tax advantage, tax, quote unquote, tax free, and the ability to pull your money out in a year or two. And if you see a better opportunity come along, that's, I think, that's where I'm actively looking and putting money.
And I am a huge fan of DLP. I hold quite a bit of capital there as well. So good choice. And I love hearing other people that are skilled and educated in this space confirm the operators that I love as well. So glad to hear you answer it that way.
It doesn't give the check mark that DLP is the be all end all, but I think they are, out of all the operators I have worked with, I view them as the operator I compare every other operator to.
I am in the same boat as you are. Very good. Well, Pascal, this has been a lot of fun. I've learned a ton, and every time I talk to you, I learn more. So thank you so much for being on the show. I really do appreciate it.
Yeah, thanks for having me on.
Awesome. And to the audience, as always, we encourage you to continue that education journey in the passive investing space. But more important than that, make the decision to place your first or your next passive investment. I'm convinced that once you do, you will just wish that you had started that much sooner. So be sure to join us again next Thursday for another great episode. And don't forget to like and subscribe. And thank you so much again for joining us here today.
Well, there you have it, ladies and gentlemen. Another episode of The Gentle Art of Crushing It. It was an amazing episode. We know we sure learned a lot, and we hope you did as well. We want to take a second and thank you so much for viewing or listening to this episode. And please just know that we only ask for one favor, and that is to make this life magnificent. Thank you, and have a wonderful day.